All right, so I took a trade 9th of January, Friday. It was a trailed stop loss outcome of plus 35 pips. So where I left off from yesterday's trading session, I moved stop loss from break even up to trailing just below these lows. Once price action started clearing price range and the 30-minute gave you a candle open with a top wick first, I started to trail my stop loss below these lows because I understand that once you begin to retest these areas, the likely chance of price action pushing down to get this wick is quite likely. Therefore, you will most likely see your stop loss because, again, the entry opportunity wasn't necessarily the most optimal. It wasn't necessarily the best. It was the rebreak of the current hour candle highs. Therefore, for me to manage my position, I can do it a little bit more aggressively, try and save out on some pips. Once price action started pushing up, the big question for myself is, well, why did price reject here instead of actually giving us the liquidity grab all the way up to 4519? I look on time frame narrative, we look on the mirror of price action of what I'm looking to target. We typically always see price action clear the range all the way to satisfy 4519. So why in this case did it not? I still don't know the answer to this. It's what I'm trying to figure out. But if we just go and give a really good rundown of what price action did, the requirements that was met, I had my systemized approach. I used my 4-point checklist, took a buy limit based off of the higher time frame structure and the 1 hour context plus the lower time frame narrative. So the 4-point checklist was used. I took a buy despite the previous 1 hour candle and the half hour, as you can see, respecting this resistance here at 4494. The lower time frame had conviction. If we look at price structure on the lower time frame, you're starting to create some form of breakout towards the upside. We understood that the 4 hour and the daily had a pretty bullish narrative on price action. We overall wanted to see all of the buys up. We're looking to break outside of the range. So when we did see the 1 hour candle give us the candle closure respecting, it wasn't the end of the world, since you did open up bottom wick first, you ended up pushing out. We waited for the first 5 to give you the closure above, and as you started pushing above on the 1 minute time frame, we started looking for rebreak at highs. Once price action started popping up, we were waiting, and then price action eventually took us in. Once price action gave you a shop, we got into the market and price came back down into drawdown to retest the lows. So in this trade position, yes, we used the 4-point checklist, we understood liquidity areas, we understood what price was mirroring, we understood the higher time frame, the daily, the 4 hour, the 1, the 30. What I could add in terms of taking rebreak at a highs, because rebreak at a highs isn't typically an entry that I always take. This was relatively aggressive. We had the stop loss placed just below the 1 hour lows because we understood that once you've retested the lows, which you did in this case, you had the hour open, price action pushed up, gave you the bottom wick, satisfied the bottom wick, rebroke the lows to then start pushing up to rebreak the highs. So technically this is validated for me anyway. But what I could potentially add in the future is utilizing the 1 and the 5 minute time frame, but wait for a retest to make sure that I'm respecting the range that I'm currently in. That is something I didn't really wait for because I didn't think I needed to. Since you already had the retest, price action is starting to push up, you're utilizing momentum to drive you up. However, in this case, as you can see, price action has retested the area to then show some form of respect. So once you've found your respect, you can then look to take the rebreak at a current hour candle highs. That makes a little bit more sense too. Then you would have the ability or more flexibility in the trade position because you don't have unnecessary drawdown beforehand. Again, it's something that I'm only suggesting. It's not something that I'm immediately going to use. I'd need data to back it up before I start putting it into my trading strategy and skill sets, because ultimately right now I'm completely fine with risking a couple extra pips just to come down and retest. After all, it's still part of logical price action. So price action started pushing up. There is no concern here whatsoever. I'm happy with the way price action has pushed up. The question is why and what is the reason for price action at 4515 to suddenly reject? If I look to the left of my screen, what we typically see within this area is price action starts rejecting but never comes back down to reject your entire move all the way down. So it doesn't make sense as to how am I supposed to know price action is going to start rejecting at this specific area. What I typically see on price action is price will start pushing up from the bottom of the range and satisfy your entire range up to 4519. So the intention of my trade was to get the full take profit all the way up here at 187 pips. So I have 3 questions to ask myself coming out of this trade position. Could I have managed my position any better than what I had? Can I set targets any lower than where I placed it? And should I keep my trailing stop loss part of my dynamic management in my position? Well, to answer how I could manage my trade position, I don't think I could have. If we're purely looking at giving my trade the most amount of room possible to trade to give the highest probability possible to hit your full TP, I think I couldn't have done anything better. I don't typically use a trailing stop loss, but in this case, I decided to because of the way the 30-minute candle opened. You gave me that top wick first, which doesn't indicate a lot of confidence that price action will continue to push up without having to come down to retest this area first. Therefore, my immediate decision is to protect the current position that I am in to benefit the most out of the trade. Therefore, in terms of probability, I will let price run all the way up in case it does grab my full TP, but then have a trailing stop loss so I don't have only got a break even trade. I want to make my position idea pay. So the way that I've managed utilizing a trailing stop loss was a good idea. I wouldn't change that at all. Could I have made it more aggressive? I really wouldn't think so, because the more I trail my stop loss, the higher probability you're going to get hit on that trail stop loss, even though you understand price action should retest the lows before pushing up because that's price structure. So it wouldn't be within my means, it wouldn't make sense to me to continuously trail so aggressively to then get stopped out when what could have been a full take profit. Could I set targets any lower than what I've done? I don't think so, because if we look to the left of my screen on the lower time frames and the higher time frames, I've never seen price reject at this area before at 45.14. And in this case, price action came down for the bottom wick on the 15, came down for the bottom wick on the 5, and didn't really give me too much in terms of an indication that price action should continue to drive down. I can argue about the 5-minute giving you this doji bearish. That could potentially mean reversal. But overall, time frame bias still tells me you have momentum to drive up. If I look to the left of my screen, there is no indication that price action would have given you rejections in this particular area. So could it be maybe I need to look at price point behaviors again? Maybe the way the 5-minute looked, it could potentially look to manage. The way the 1-minute started to form structure, I could potentially look to manage. As you start stalling at this area, you came 14 pips away from my full take profit before price decided to start rejecting. And now if we zoom out in the entire trade, it does make sense. Okay, price action's grabbed more liquidity. So now if price action is starting to drive up, at the open of next week on Monday, you will probably see a full take profit. So in my position, this would have been a break-even trade position, but because I utilized a trailing stop loss, we came out with plus 35 pips secured, and the risk was still off the table. So should I keep my trailing stops? Absolutely. In a scenario like this, where I know the probability is higher for price action to come and retest, there is no point of me keeping stop loss at break even if I know price action will most likely wick me out, since this position entry is not as optimal or specific as I would have hoped. If I had a position entry at 44.95, it would have made a little bit more sense to start trailing my stop loss after the fact you've grabbed the 30 bottom wick. And once price structure begins creating this kind of move, you're looking to trail your stops at the lows, securing X amount. So overall, yes, the trade to finish off the week was good. We secured something, we're in the green, but understanding how can I improve? What is the next objective to focus on for my next trades? How can I avoid this specific scenario and benefit more out of my trade position? In this case, potential that the 5-minute gave you the indication that price action should start pushing down. And I was here looking at this candle. My initial thoughts is to wait for a top wick first, or since you got the bottom wick on the 15 and the 5, could potentially still push you up. So either way, I'm still expecting full TP to get tapped. Price structure hasn't broken. Price structure only breaks when you've come down to grab the wick, which in this case is irrelevant to me since I already know my trailing stop loss is going to prevent price from coming all the way down to break even, and I can at least make my position idea pay. It's been a great trading day. I'm happy with the outcome. Every single step forward when I'm experiencing trade ideas like this, when I'm experiencing trade outcomes like this, is a learning opportunity for me to get better for the next time I'm trading. I hope this helps somebody else as well, but this is predominantly to make my own benefit and purpose so I understand and document my journey. I know what went wrong. I know how to improve. When I look back at it in a year or two from now, I can see how far I have progressed.